All right, guys. Hey, thanks for checking this out. This is the Audit Cast. We're going to jump right in. No intros, no nonsense. I just want to give you the information quick so you can get right into working. All right, so this episode is on cash and how to audit it. So the first thing to remember is just keep it simple. Remember what the purpose of this test is. You're just making sure that the company's records for cash are accurate. And the simplest way to put that is their books say $50, but their bank account says $40. So they need to figure out what that $10 difference is between the bank account balance and the book account balance. And essentially that's kind of already been done for you through their reconciliation process. And if that reconciliation is wrong, then their cash is wrong. So let me dive in a little bit more here and help you guys out. So, a couple things that you need to know are companies typically have a bunch of bank accounts. They're separated usually by business functions. So you'll see like payroll accounts or AP accounts, revenue stream accounts. And a lot of times they are all bundled up into what's called a concentration account. It's where all those peripheral accounts zero out to each day. So they essentially use those functional accounts just to pay bills or receive monies. That way they're not having to, they zero out every day so they don't have to reconcile a bunch of accounts, and there's not a bunch of noise happening in bank accounts where they don't need to really be having activity in. For instance, in a payroll account, you would only expect to see payments out to employees and then the lump sum that actually funds that bank account amount for that given payday. So the way that works is the concentration account, like the main account, holds all the cash. And maybe like the payroll department or whatever says, hey, we got to pay $100 to everybody on Friday. So the concentration account is hit for $100. It gets sent to the payroll account, and that $100 goes out. So that's kind of the idea. That's mostly what I've seen in the industry. If your company's a little different, that's fine. If they don't have a concentration account, this still applies. But so what the companies do is they perform reconciliations for each of these accounts. And what essentially all they do is they get the bank statement for that bank account and they compare it to what their books say. So kind of like in the first example, that bank statement said $40 on hand in some bank account, and the books say $50. So they need to figure out what that difference is. And so, I mean, you guys have heard this through school, you've heard it through training, so on and so forth. So I don't want to get crazy into the background, but just to give you an idea of what some of those reconciling differences are. It's going to be deposits in transit or outstanding checks. So, I mean, you've heard that buzzword. Maybe you don't know what that means. A deposit in transit would be something where the company may have got paid for something. Let's say they got paid $5. I'm using really simple numbers, by the way. Let's say they got paid $5 in the form of a check. They received that into their headquarters. So they go, okay, hey, we have $5 more to record in our books. But the bank actually hasn't either got that check yet, or it hasn't actually cleared the bank yet. So the bank doesn't know it's there. Pretty simple stuff. An outstanding check, kind of the other way, where the company's written a check so they know the monies are gone, but the check hasn't cleared the bank, so the bank doesn't know it's gone. So I'm assuming you guys have a pretty decent idea on that, but if you don't, take a read a little further into just, I mean, it's simple enough just to Google outstanding checks versus deposits in transit, or feel free to reach out on our message board. I think it's our forum tab on the website, theauditcast.com, and we can give you a little more details. But what I want to get you guys some info on is how do you audit this stuff? So the simplest answer is you're kind of just reperforming what they do, what the client does. And even simpler, you can just say, you're going to ask the bank, how much money does the client have? So you send a confirmation which says, hey, the company says they have $50. And the bank goes, okay, well, that we're showing 40. And typically, I should even say that typically you don't put a number on the cash confirmations. You just ask. You just ask the bank. You go, hey, how much money is in this account for this company? A lot of people are using confirmation.com now, so you've probably been familiar with that. But that's what you're doing. You're just saying, bank, how much money does the client have? And let's say that, to keep going with our 50-40 example, that bank says the client has $40 in that account. So you've just knocked out 80% of the client of the balance for testing, because the client says they have 50, the bank says they have 40. That's the biggest, most important part of the test work. The next piece is testing those reconciling differences. So what you should do with that number the bank gives you, what the confirm tells you, that $40, is you just need to agree it to the company's internally developed bank reconciliations. So what a bank recon is the client stacks up their book balance, that $50, versus the bank balance of $40, and they explain the difference. And usually that's made up of outstanding checks or deposits in transit. Pretty simple stuff. There's going to be, in your testing, you should agree out the bank balance to their bank recon. Then you should agree their book balance to their general ledger, trial balance, lead sheet, wherever your team is kind of doing that. And then they should give you a listing of outstanding checks and deposits in transit, but if they don't, you just have to ask. And the total amount that's listed on that bank recon, let's say they had in our 50-40 example, they had, I can't do that quick of math. Let's just say they had a handful of deposits in transit and a handful of outstanding checks. Each of those should have a listing of which check numbers and dates and invoice numbers and whatever that relates to. So for outstanding checks that haven't cleared the bank, the paid out checks that haven't cleared the client's own bank account, you just need to get a copy of the check or invoice or whatever just to support that it's actually been written. For deposits in transit, same thing. Usually you're going to get the check to actually support it. There's a couple ways to do that. Usually when you're auditing, let's say you have a 12/31 year end, you're not going to be auditing till January, February. So you should be able to get the subsequent bank statement to show that those checks have either cleared or deposited. That's kind of always an easy way, so you can trace it to their subsequent bank statement. Another way is if for some reason you're on a shortened timeline or whatever, and if your senior's okay with this, you can log in with the help of the company to see their recent activity for their bank account and just watch them find the check online. Let's say we had an outstanding or a deposit in transit that the company said, yeah, we have $5 more, but the bank didn't catch it yet. But like on the 3rd of January, the check cleared. You can sit with the client to do and pull that activity and test that stuff, along with getting the check and other support. But essentially, just get the support for those outstanding checks and deposits in transit in the best way is from the bank statement. There's a completeness check you will do, which should be in some sort of prescribed procedures, just to test the completeness of those listings. So you want to pick checks that are not on that listing and trace, don't pick from your listing of either outstanding checks or deposits in transit, and just maybe select from the bank statement or whatever. Trace them back into either one of those listings to make sure they're appropriately or inappropriately captured there. That's like the biggest part. So I think to go with the theme of having a 30,000 foot overview, remember that what you're doing is you're taking a client bank recon, which shows balance per their records, their book, whatever, and then a balance per the bank, and explaining the differences. And so remember, all you need to do is agree the bank statement to the per bank line, agree the per books line to the GL, and then get support for the differences. Usually you're going to do some kind of sampling over those other differences. And so that's the gist of it. So go get started, I guess. And hopefully I didn't take too much of your time. Hopefully this helped. Check out a slew of our other episodes out there. We have a handful now, and there'll be more coming. So check us out at theauditcast.com or at theauditcast on Twitter, auditcast on Facebook. Just, check it out. All right, thanks, guys.